Hey everyone, welcome back to Capital Markets Quickie. I'm your host, Endrit Sella. Let's dive into today's market highlights. So, European shares edged higher yesterday in thin trading after a European Central Bank official signaled that policymakers could consider successive rate cuts starting next month. Futures on the Nasdaq 100 climbed 0.4% to a record high with U.S. markets closed for the holiday. Car makers and utilities led a modest advance in the stock's Europe 600 index. Turnover was less than half the 20-day average for the time of day, with UK and US markets closed for holidays. American equity futures advanced, and a gauge of the dollar dipped. An ECB rate cut in June has been widely telegraphed, but subsequent steps are less clear given uncertainty over wage growth and factors like the fighting in the Middle East. Data this week may show headline inflation in the Euro region ticked up in May. According to experts, European inflation is back, though the May spike may be temporary. This does not call the June cut into question, but adds risk of depricing additional cuts later. Among individual movers in Europe, EFG International AG rallied as much as 4.7% following a news report after the market close on Friday that Julius Baer Group is exploring a potential acquisition of its rival Swiss private bank. Julius Baer slipped 0.8%. Meanwhile, the MSCI Asia Pacific Index posted its biggest gain since mid-May, led by stock gauges in Hong Kong, China, and Japan. A swath of inflation prints from Australia to Japan, the Euro region, and the US is due this week as traders finesse bets on the outlook for monetary policy. The Federal Reserve's favorite measure of underlying inflation is due on Friday and is expected to show modest relief. Fed Chair Jerome Powell has stressed the need for more evidence that inflation is on a path to the 2% goal before easing policy. Several US central bankers, including John Williams, Lisa Cook, Neil Kashkari, and Lori Logan, are due to speak this week, adding to the narrative around future rate moves. Trading of cash treasuries was closed. The new T+1 rule that has the potential to cause trouble for overseas investors will come into effect when traders return from the long weekend, making U.S. equities settle in one day rather than two. In commodities, gold gained while copper futures fell. Oil advanced after its biggest weekly loss in four, with the focus on an OPEC plus supply meeting on Sunday and U.S. demand at the start of the summer driving season. That's it for today's Capital Markets Quickie. Stay tuned for more updates as we continue to navigate these market movements. Have a great day and see you next time.